last stream, but I guess it went offline. So we're going to do this all over again from the beginning. So based off of Thursday and Friday, we're going to use candle science and figure out what the probabilities are. Right, we can see that there's only a 32%, sorry, there's an 82% probability that we do not take out previous day high, right? And if we put the close price in, so we did close, where did we close yesterday? So we closed above the open. So we can put that in here, that we closed above the open. Where is the open? Right here. Right? And so now we can still see that there's still higher probability not to take out previous day high than to take it out. And there's more probability to take out previous day low. Right? So we write this in, we can see that there is a 57% at the low. We'll take this out. All right, let's make this less intrusive and weird. And for this high, right, there's a 34% that we take it out. So if whichever way we do decide to go, we can at least get the measurement high to low, how far we typically move outside of it, right? So if we did take out the high, right, we know that between the 50% and the 70th percentile is between 0.24 and 0.36. So if we do take out this high, right, we know that we go 0.24, and then the 70th percentile is around 0.36, meaning that 70% of the data reverses around this area. We know that that's if we do take out the high, right? We can do the same thing with the low. Right, let's say we take out the previous day low. Right, we can see that the medium's 0.58, and then the 70th, do this again, the medium of the low is 0.7, right? So this yellow line represents the low, right? Let me get rid of that. And then the farthest we extend is 0.7, 50%, and then the 70th percentile would be around 0.996, right? So we can take our price range tool, say 0.7, would be right there, to 0.96. Would be right there. This is like, these are both the extremes, right? To hit the extremes, right, we'd have to have a 500 handle day to the downside. So maybe it's better to have the 30th percentile to the 50th. Right now it's to the 50th to the 70th percentile. So they expect this load to come all the way here. There needs to be some kind of news catalyst to drive that. But either way, well, above previous month 50, previous month NFP Friday. So we anticipate 70% green days, 30% red, right? From a day of the week, we're stuck inside of this 1800 to 1900, 1930 Sunday range. All 80% levels to the upside have been hit. Now we're seeing, can we make it to the 2%, right? The 2% to the up, which has happened 69 or 36 out of the last 52 weeks, right? Or does it want to come to half a basis points lower, right? So we're looking to see the low of the week versus the high of the week. There is time probability that this is the low of the week right here, right? The mode sits right around this area, and then the median for the lows of the week or the high of the week, whichever one it is, right, goes from here to the night at 2100, right? And then we know that 50% of the lows of the week and the high of the weeks have been put in. All right, let's go see what the markets have done. And so we see contradicting markets, so we can expect high day, low day after market open, right? We can see we went long, false, broken, and long, true, meaning this London OU has been left open, this P12 mid has been left open. So let's go look at the data and see what it shows us. Go to the dailyprofile.com, log in. All right, I'll do my journaling later. Let's get access to the daily profile. All right, we know that Asia was long, false, broken. London was long, true, open, and we went long. Right? We said this London has a 66% probability, but it has the most probabilities happening of it getting retraced to between 9:30 and 10:15. We can see that's where bulk of the data lies. So that's going to be a target if we can do the 4-step reversal in New York. Right? We can see that 70% of the time turned false, 29 stays true, meaning like this is 7:30, 8:30, we break out to the upside. 70% of the time we will make it back to this low right here by 11:30. 20% of the time we can't do that, right? So we'll be paying attention to that, right? So if we expect that to be false, let's see what the local market is telling us, right? So let's go to a higher time frame so we can see the year worth of data, right? We can see over the last 236 days, there's been like 56% of the time we went false, 43% went true. Max streaks were 8 days going false, 6 days going true, and we are on day 1 of false. So we're trying to see, are we going to go on a false streak versus a true streak, right? And that's why we track that data, right? So now going back to our analysis, right? We know that in our data, we can go on and assume, right? We do the 70%. That's what we want to base our trades on, is the 70%, not the 29%, right? We can trade off the 29% once live price shows us that it ain't happening. The higher probability ain't happening, and then we can start targeting cash flow and targets that way. All right, so we put false. We can see that London maintains its hit rate of 9:30 to 10:15, and it increases in probability. Right? We can see that here is a high day, low day, right? For a long false. It shows that we can put a high of the day between 9:30 and 10, and then that would lead to us putting a low of the day in the afternoon, or the low of the day's in, which is currently at 3 o'clock, and we can expect just to keep going higher, right? And then that would sync more with the long true versus the long false, right? If we do get the long false, what we can see here is that we spike up, we lose it, but by 10 o'clock, we go into a range. So quarters in the first 30 minutes can't be trusted at 10 o'clock. And then we drop down, but we make a DWP or a range 1 move, and then we go into a range after the move happens. Right, so let's go see the probabilities of RTH, which is below us. We can see that they're very, very high hit rates for a Tuesday under the long false variable. So if we go false and we take out that 7:30, 8:30 low, settlement's a great target to target, right? We can see P12 mid is also a 90% target that we should target between 9:30 and 10:15. Right? So this is going to be a game of waiting for live price to confirm it, right? We're inside a previous day footprint or wick, right? So we're either going to reject here or we're going to sweep the high and then expect it to go lower, right? Now let's talk about how we identify this, right? The true versus the false, right? This is going to represent 9 o'clock's hourly candle, high, low, mid, right? And this is going to represent the 9:30 trade. the 930, right? 1 minute high to low, right? If we continue going up above the 930, right, we're going to keep assuming it wants to go higher to this percentile box off the 730 to 830, 30%, 50%, 70%. Right, and we're going to let it keep going. If the 930 gives us a long, we'll take longs for cash flows. Right, but we're going to be looking to see, can we put the reversal in by number 1, get in below 9 o'clock's 50, 2, get in below 930's low, 3, 10 o'clock taking out 9 o'clock's high, and 4, putting a statistical high in Q1 of 10 o'clock. That doesn't mean those are the steps that we're going to wait for to place trades. We can start position sizing for a reversal where we see fit, right? But then once we have completed these steps, they will activate the P12 mid, the London OU, and settlement, which are below us with high probability, right? If we do it before hitting previous day high, right, then we can definitely target previous day low with runners because that's the higher probability for candle signs, right? So that's how I would do it, right? So with that being said, that's my wargaming for today. Hopefully it helped, and later, haters.